All right, all set. So, what's going on? I know we are almost mid of December. That's like another 2 weeks, and then 2024 is gone. Before you blink it, this year, for me, I mean, this is, or maybe I find it every year, the year passed by very, very quickly. So, today, a couple of things that I want to talk about. One was there was a new news around quantum computing, and that did cause some concerns in even in TradFi as well as on the crypto side. So we will talk about that. There is and of course now, like I said, we are nearing the end of 2024, so we start to see some predictions coming up. The most recent one was on the crypto side. I start to see some predictions in the market. So we'll want to go through that one, and I'm sure maybe by next week we will have predictions coming on. Hey, what's your S&P target for the next year and all that stuff, right? So this is a time when so-called smart money will try to guess what's going to happen in in future. What else? The success in quantum computing proves we live in a multi-universe. Yeah, the whole concept of quantum computing is little, you know, esoteric. Trying to understand the how entanglement and everything works. It looks like a science fiction. So anyway, I'm not going to get into the details of quantum computing. I don't know that details, myself. Still trying to figure out how the heck this works. It's like you're breaking the laws of nature or laws of physics as we understand. I wouldn't say breaking laws of nature, because it looks like quantum computing exist in nature, but just the laws of physics that I've understood so far, it kind of seem to break it up. And but anyway, that has opened up a lot of possibilities on what you can do using that computation. And whenever the world gets a new power, along with some positive use of power, there is also a negative usage of those powers, and that is what is concerning the markets. So we'll spend some time on that. Markets have been great. So we'll talk a little bit about market and anything else. I got some charts to share with you guys. We'll go through some charts. Anything else on your mind? How was the week? All okay? Anything concerning? Does the 2024 looks like I think except one, maybe one or two cases where we had actual, some action or drawdown in the market. One was, of course, I think August 5th is was one case wherein we had some S&P, some action in the S&P when the yen carry trade blew up. And now, we don't even think about it. Let me bring up Thinkorswim. Okay, it's installing updates now. And if we extend and look at what happened in August, right? It's just a blip. But going through that day on August, it looks like, hell has broken loose. What we gonna do? People getting concerned. VIX spiked to 65. Let me just bring up SPY, right? Let's go back and look at, this was August 5th. Right? And since then, what? It was 512. We're up like almost 20% since that August 5th. Yen carry trade blew up. Who cares? And now, even if you look at for 3 years, we won't even, not much noticeable. So long time horizon helps. Long time horizon helps us to get through all these day-to-day concerns or day-to-day movements in the stock market. I don't care much about that anyway. So, all right. So I guess let's get started with today's session. If you have anything else, put in chat if we want to talk about anything else. Right? Cool. Okay. Welcome everyone to session number 259. We are almost getting to the end of December. That reminds me, little housekeeping um, for next week. Next week it's gonna be only 1 hour. I have to drop some folks to airport, so I don't want them to miss the flight just because of me. So we'll only have a 1 hour session for the next week. And on 28th, I'm gonna take a break. So 1 hour next week, 28th, you guys can find out what else you want to do on Saturday. I'm sure probably there are many better things in life to do than come and talking about just stocks or investing opportunities. Uh, I'm just kidding. So so we'll have a half session on next week, break on 28th, and I will cancel and update the invite on Meetup, and then I'll see you guys on 4th for full session. Okay. All right. With that, let's talk about today's session. Today, two main topics that I have is talk about quantum computing, what's a new milestone that we saw, and what could be some implications, of that, both on how we'll live and more specifically around, on the crypto side, because I did see some movement over there. And then it's time for prediction. So want to go through Bitwise 2025 crypto prediction. And of course, we'll start with looking at a market overall. Few things that caught my attention in markets that I want to share, and some interesting charts that I have. And if you have any questions, feel free to put in the chat, and we'll take it from there. Cool. All right, so let's dive in. As always, anything that we discuss here, and we've been doing it almost now 4.5 years, is not a financial or a tax advice. I'm not a financial advisor. I'm not from financial community. Uh, Maybe I'll bring some content which helps us in becoming better investor, educate ourselves. That's my goal. That's my community service. That's why I do it every weekend. So don't go and trade based solely on what you hear. Hey, I heard Vivek talking about this in a meetup, and I'm gonna back up my truck on this particular stock. I don't think you should invest based on anyone. There are a lot of folks talking on Twitter, CNBC, Bloomberg, meetups, spaces. Don't invest based on anyone, irrespective of how attractive the deal may sound to be. Okay. All right. So let's first look at overall market. S&P has now notched 57 record highs in 2024, which is great. It's good time to be an investor, right? So what, year to date we are up almost 28%. I won't be surprised that if in next 2 weeks we actually get the Santa rally and we may cross 30%. I won't be surprised, because especially because of change in administration, a lot of a deregulation is probably will be coming in, right? And of course, when the president keeps the score by looking at how well the stock market has performed, you know, what Charlie Munger has said, right? You focus on the incentives, you focus on the rewards, incentives will tell you why the person is doing what they are doing. So Trump always considers um, stock market as a scorecard of how well he has done in his presidency. So I don't want to fight against that. Right now, having said that, is it going to be a straight way up? We don't know. And I don't care about if I would rather welcome a small pullback. I mean, since August, not really a pullback. It's almost what, four will be 4 months, and no, almost 5 months, because this happened at the start of August, the yen carry trade, and not much of a pullback in the markets, which means a lot of a leverage will be coming in. People get animal spirits are back, and we will talk about some of the stocks. But yeah, I would welcome some pullback. It's healthy for a market. It cleans up all the leverage and brings sanity back to the market. But you know, I won't mind it going up another 20% next year. Not that I'm hoping that it will go. I am not. I mean, no one knows where the markets will go. But if it goes another 10%, I think that will be good enough. We have had a very good run, guys. Let's not be too greedy. If since the start of 2023, we are up almost 60%. So which has been but only fifth time in the history, like in the last 75 years, we have had almost 25% gains in consecutive years. So pretty good, pretty good. And so 57 record high means almost every week, one record high per week, or more than one record high per week, right? On an average. So, which is great. And if you've been waiting for, oh my gosh, I can't deploy capital now because it's at record high. We just have been waiting for this year. That's why it's more important to have time in the market rather than trying to time the market. Right? Timing the market just doesn't work. In real life, just doesn't work. You can go back and look at umpteenth number of studies which had looked at the data in terms of, hey, how about if you have invested at all-time highs, if you have invested on a dollar cost average, timing the market just doesn't work. Even though it sounds very counterintuitive, I think we looked at one of the results, which was buy low, sell high. You sell when the market hits all-time high, and then you buy back when the market goes down, I think 5%, 10%, and 20%. You get back into the market. That's what all the swing trading is about. I'll sell when it's high and I'll get back when it's low. That was the worst strategy. You would have done much better if you've just bought it at all-time highs and never sold it. So given enough time, I think we just have to figure out how to stay in the market, right? Not trying to time the market. So Nasdaq is above 20,000, right? And it's been driven by solid economic growth. I mean, US is still growing. Corporate profits have been good. Inflation is moderating, not yet at the level of what Fed wants it to be, but who cares? Fed is already started to ease, right? Even though inflation is not at 2%, Fed is like, you know what? We don't see a path where inflation might go high. You know, but so Fed has started to ease, and I think we've already planned for another rate cut. Market is already expecting another rate cut from Fed in December, which is next week. We have FOMC meeting, so we should see another. If we don't get another rate cut, I think I'll get my wish, which is, hey, we need some correction in the market. But I don't think Jerome Powell is going to surprise us. Especially, I mean, he has been very clear in giving the signals to the market and then following up on the signals. But we've also seen the central banks across the world. European Central Bank, they cut their rates. Canadian bank also cutting their rates. So I guess the liquidity is back in the market. Easy money is going to come back in the market, and that generally works good for financial assets. Right? The opposite may not be true, which is what I used to think years ago, saying, hey, liquidity coming in the market, Fed reducing the interest rate in the interest rate is good for the stock, then Fed increasing the interest rates must be very bad for the stock. Right? The whole experience of 2022 until today has proven us wrong. The interest rates are much higher than what it was in 2020 or 2021, right? But the markets have also risen higher with them. in a long term. I think it's all depend on what kind of a companies they hold, and the corporate profits, your earning powers. The interest rate increase and decrease does matter for very short time. It did matter in 2022 because the pace of the increase of the interest rates was, we have never seen it 40 in last 40 years. So companies didn't know what exactly to do. Give them a year, they'll figure out how to cut their own costs, still become profitable, and that's what we have seen in 2023. Earnings start to grow again. Companies became lean and mean. Their projections start to become better, and the markets ripped higher. Right? So uh, my intention is still to focus on the great companies and hold them in portfolio. I'm not gonna go to the deep end, degen end, and try to now swing for the fences, which we will see in 2024 once Fed start to reduce the rates even lower. I'm expecting to see a lot of those unprofitable companies, coming back into the market and commanding higher valuation than what they should deserve. Right? But we got to be careful. We can't blame the market for, hey, I bought this and now the stock is 60% down. Market failed me. No, I guess we need to know what we are buying. Right? So market returns S&P, wow, Q1 24 was like 10%. And it becomes really, really hard if you have not invested. And then we see that in the first quarter itself, the market was up 10%. Then you're just waiting on the sidelines to for a little bit of a pullback, but we never got any pullback. Almost every quarter, we've been up like 5%, right? Except Q2 was almost 4%. And our GDP has also been growing 3.3% with the recent numbers. And inflation, even though the recent numbers popped up a little bit higher, not really meaningful higher, right? So, and Fed rate trajectory is now projected to continue to go down and maybe stabilize at 3.5 to 4. Way back in 2019, if we have these meetings, or if we talk to anyone and say, hey, when the Fed rates were zero, and we talk about the fact that, how about if a Fed rate is 3%? What do you think? How the companies will do, how the markets will do? Right? Nobody at that point of a time could imagine that the markets will be almost double, right, with these Fed rates. But now it's fine. It's common. We have seen markets already hitting all new time high. Dow Jones hit new all-time highs. Nasdaq is new all-time high. S&P is new all-time high. I think Russell is still. It probably will catch up. But market where it is with almost 4.75% currently, it's a lesson to be learned. What else? Housing sector. This keeps coming up, and all I saw, there was another news. I think New York mayor, they decided, or was it New York governor? I don't even know. Some politician decided that it's a good idea to dole out some cash to New York residents so that they can get some help for the down payment for houses. I don't know, what do you think about this? Me specifically, I don't think paying out cash or is gonna help in any way for this housing crisis. It's gonna intensify the competition for the houses, and then the prices of the houses will go further high. People will be bidding against each other. The problem is not that the houses are expensive. Problem is, I mean, houses are expensive, but the reason is we don't have enough houses. So this chart shows us the new home construction. It peaked in 1972, and after this whole recession of 2007, 2008, many of the builders probably never came back in the market. But now we are almost from 2007 to 2024. 25, almost what, 17 years? We haven't caught up. Our housing sector hasn't caught up in terms of the number of new houses being built. We haven't caught up yet. And this is a reason. I mean, we have some, our housing inflation is still high. This is the reason why we see the next generation keeps saying, hey, we can't afford to we can't afford to buy a house. And the solution is not to mail checks. That's never going to help. The solution is to fix the problem where it lies, which is what's the reason why we are not able to increase the number of houses? Do we need to look at the zoning? Do we need to look into the permitting process? Maybe do we need to give incentive to builders for building more? Which maybe, hey, maybe let's cut down the interest rate. Generally, cutting down the interest rate sounds to be inflationary, but maybe if you cut down the interest rate, builders will build more. That will bring down the prices of house. Counterintuitive. I don't know. But tolling out checks, sending cash, saying, hey, we're gonna help you in your down payment, it's just not gonna work. What do you guys think? Any other thoughts? Do you think it's a good? I mean, it probably win those politicians some votes. Beyond that, I don't know. How is it ever gonna happen? I mean, we saw in 2020, right? When the stimmy checks were passed. What happened? Everything became more expensive. Inflation shot through the roof. So I don't think, it will be any different this time. Any other different thoughts? You guys want to chime in? What else? Other chart. US stock market. We generally talk of that the US stock market is very expensive as compared to the rest of the world. The US stock market is equal to 70% of the rest of the stock market, whereas our GDP is what, 20%, 26% of the world's GDP, and we have what, 4% population of the world's population. Also, it's super expensive. Why not? Look at the inflows that are coming into the US equities. Now we got what, $140 billion after the Donald Trump became president-elect, because the rest of the world also wants to invest in the US stock market. Right? And now this is the US net capital. Look at the amount of the inflows that have come in the US market. Now, is the US market expensive? I think so. Is it bubble? I'm not sure yet that we can call it as a bubble. But it is definitely expensive, and it is expensive because investors are ready to pay little higher price to own a piece of US stock market because it has performed the best when you consider in terms of a real returns than the rest of the market. So where else you go to find the yield? Folks are investing back in US, and hence a stock market is 70% of the world stock market. What other one? This is an interesting one. Right. Now, given the gains that we have been seeing, and looks like there's no tomorrow, looks like nothing else can go wrong. So this chart shows you the time lapse of net assets in a single stock. First of all, it's a single stock ETF, and that too leveraged long ETF. So let me pull, I don't think, okay. Alrighty, and that too, it's a long ETF. So aggregate net assets have risen 12x over the 12 months, right? ETF NVIDIA has 7.4 billion, MSTR MicroStrategy 4.8 billion, Tesla 4 billion. Now, these three account for 85%. they, this story probably won't end well. I'm not a big fan of a leverage funds. It doesn't work out if you have to hold it for long term. Even the issuers that issue these leverage funds have come and talked about the fact these are not to be buy and hold. These are only for a specific reason, for hedging at a very short duration, maybe 2 days. I won't go mad if you want to get exposure for 2 days, but who cares? When everything's looking green, a lot of retail investors have been piling into these leveraged single stock ETFs, right? And this crazy. So whenever we get any pullback, and this is where these pullbacks are healthy, because you'll get these washouts from these leverage funds. People will get, they'll wisen up and say, what the heck I was doing. But everyone has to learn their lessons. So, I won't be the one who'll say, oh gosh, why did it happen? And I feel for the folks who have bought these leveraged ETFs. No, I don't. Right? Like, I don't feel for the folks who lost their money in buying hawk to a meme coin. Guys, what you guys were thinking? Today on LinkedIn, I saw a post saying, hey, we should regulate the process of how these meme coins are being, sold on that various cryptocurrency exchange. And I'm like, what are you even talking about? You're not trying to legitimize selling crap on exchanges. Guys, do your own homework. Do what? And I have no sympathy for those who lost money. Now, what you guys were thinking while going in anyway, right? You were trying to, uh, you know, push your bags on someone else. Someone became smarter than you. You were trying to steal from others or do a rug pull to others. Now, if someone did that to you, well, don't blame it. So I will have no sympathy. I will have no tears for the folks who will lose money in the leverage funds. You should understand what you're getting into, and then don't blame the regulators for why did they allow these instruments. Right? A
Perfect.
good thing about US capital market is, guys, our regulators are not merit regulators. Right? They are not here
Perfect.
to decide what's good or bad for you. US regulator, SEC, is a disclosure regulator. There are two types of regulators: merit-based regulator, disclosure-based regulators. Maybe some other countries have merit regulators. They will decide, is this instrument good enough? Should public have access to this or not? Is there a chance that a public can, general investing public can ruin themselves? If yes, then they will not allow those securities to be listed, those ETFs to be listed. Your SEC is a disclosure regulator. All they want is, guys, you disclose what you're doing, how you're doing it. Let public make a judgment. Let investors make a judgment for themselves on whether they want to buy it or not. In your S1 document, if you can write it, I'm selling rat poison. It's or you know what, I'm selling Viper to you. SEC will allow it as long as you can write it down and disclose what you are selling. If you disclose that you are selling snake oil, it's okay. SEC will allow them to list. As an investor, we have to decide whether do we want to buy the snake oil or not. So yeah, I don't know. I mean, this story generally doesn't end well. Other chart around the concentration, right? A lot of ink has been spilled around. US market is getting concentrated. I was also of the same opinion that it's not good until I came across um, that a study from which I think also came and shared here from Michael Mauboussin, which they looked at last many decades of data, right? And the market concentration has Being a phenomenon, it's nothing new. And US market is not as concentrated as some of the other markets, right? So, and now looking at this one, you know, top 25% of the market, if is generating 49% of the net income, right? So if not 25% of the market, market cap is concentrating, basically top 25% of the companies account for half of the market cap of the index, sure, it deserves it. It's almost half of the net profits, right? Or you can pick up, other numbers to look at. So the fact that the market is concentrated, it needs to correct. That's a theory I don't subscribe to anymore. After I look, after I looked at more than one studies around market concentration, the fact that market concentration was not like this in 1980s and 1990s, I don't subscribe to that. Things have changed. We have a completely different type of a companies in 2020s. We have a companies that have the moats that are almost unfathomable. Now a lot of valuation and your profit margins and your margins are derived by how best you mine the data. It's very difficult for any startup to come and get the amount of data and do the mining what, let's say, Facebook and Google's can do. 1980s were a different set of companies. Those companies needed a lot of capital to operate, industrial companies. These companies are capital light companies. Those companies in 1980s, 1990s, if interest rate goes higher, they'll feel the pinch because they basically finance all their capital expenditure through debt. These companies, if you look at the balance sheets of these Apples and the Googles and the top companies of the world, they're so cash rich that if interest rates goes higher, actually it's good for them because they're happily earning 4.5%, 5% just by putting in the T-bills. Right? Their net income actually goes, their net interest expense actually goes lower. So different type of companies exist now than what used to exist. So trying to compare, saying, hey, our PE is too expensive, our concentration is too high, without contextualizing it in based on what type of companies we're talking about, is something which I don't agree to. That's not to say that the PE may not be high. I mean, market is expensive, but
Vivek,
I'm not just gonna say because the historical PE is 16, now the PE of 23, or let's say top 10 PE of 30 is expensive. Yeah, was there a question?
yeah, Vivek, like 20 years ago, Microsoft started buying bonds. And that was unheard of, these big tech buying bonds. So is their bonds fixed or adjustable?
So I don't know which bonds did they buy or not, but there are bonds of various duration. Generally, companies will buy treasury bonds because that's their, if you have a cash
Oh,
and
sorry, issue bonds. They
oh,
issue
issue bonds, they
bonds.
will always issue bonds. Like if you look at an Apple has a huge debt on its balance sheet because
Except,
Apple can issue debt. Apple can issue bonds at much favorable rate than, even better than the U.S. government. U.S. government, if they want to raise capital, they want to raise debt, which we do it like every 3 4 months. We'll raise $1 trillion. We have to pay what, 4%, 4.75%. Apple actually can raise debt at a cheaper price. So the world thinks Apple is much better managed than US government. So, and
so
again,
Vivek, at the
yes,
time, Microsoft was the first company to do that, like 20 or 30 years ago, big tech.
yes, because I think earlier we used to think debt on the balance sheet, debt is not good But over a few decades, we figured out that, hey, you need to have a having debt for expansion is okay, and it's probably a good thing because you can enhance the return for an equity shareholders as long as you don't have too much of it, right? Too much of everything is bad. So over the last 20-30 years, I guess the CFOs and basically who manage the capital structure of the company have understood that debt is not something to be ashamed of. And if you can make an intelligent use of debt on your balance sheet, that's great for your shareholders. So I just pulled up Apple. Let's go to balance sheet and see how much debt do they have. Total short-term debt, long-term debt, $85 billion of debt on a long-term debt. Oh, looks like they paid off some over the last 2 years, but still $85 billion of debt Apple hold on its balance sheet. So they have a cash, but they want to preserve the cash for whatever reason, because they can probably they have raised this debt at much cheaper, price for them. Total debt, if you look at including short term plus long term, is like more than $100 billion, almost $120 billion. So making intelligent use of debt will enhance the return for equity shareholders, because you don't have to, I mean, for that you just need to pay interest rates, right? You're not diluting your shareholders. But if you leverage too much, we have seen some companies that have gone, way out and leverage too much, and then you're not able to service the debt, then you have to declare bankruptcy. So you have to have a fine balance between, in your capital structure, depending on what kind of industry you are in. And most of the tech industry, generally the startups, they will not have debt because they can't even service the interest. Company like Apple, they can easily service the interest. Now the other companies which you will find with a heavy debt load structure will be the ones that have like utilities companies, your cell phone companies, because they have a constant predictable stream of income that comes in. So let's pick up for me, Verizon. Verizon, what is Verizon's VZ? What's their debt? $130 billion long-term debt. Or you pick up any other T-Mobile or AT&T. What is AT&T's T, right? $127 billion. Because they have a predictable income. All they need to make sure that you can continue to rotate your debt, and as long as your predictable income, you can still pay your interest. That's fine. Keep rolling the ball. So utilities, you will see finance themselves by debt. And I think it's almost 1970s or 1980s. Was it John Malone or uh, so he figured out how to basically enhance the shareholder value by especially in this telecom industry, telecom and media industry. Um, he figured out how to make his intelligent use of debt to enhance the value for shareholders. Right? So I don't mind, if company has debt, as long as it has a capability to pay the interest rates and not too much of a debt, right? Because let's say if you had too much of a debt in 2020, and then you have to roll that debt at a higher interest because you were able to raise it at 0%, or maybe let's say 225 basis points. Now in 2022, you have to roll it and raise it at 5%, and you don't have an earning capacity, you're doomed. That time you'll see companies filing bankruptcy. So it has to be a balance between your debt and the equity, and managing the capital structure is like one of the most important function of finance department. I guess maybe corporate treasurer. All right. It's a question for Maritza. When the Bitcoin ETF went live, I thought MSTR will go down because it was previously the only way for some investor to get some exposure to Bitcoin. But now that there's an ETF, why would anyone still buy MSTR? Uh, Number one is MSTR's beta is when you compared with a Bitcoin, it's more volatile than Bitcoin, right? So if you want to get, you want to, you want to invest $1,000, and let's say Bitcoin go up 1% on an average. I'm not saying every day it tracks 100% like that, but MSTR could go up 1.5 times, 2 times. It is more volatile than Bitcoin. Okay, that's number one. So folks are still getting exposure to MSTR, those who want to, you know, get this high volatility or high beta. Number two, there are still, let's say equity funds. They are by name equity funds. They can't invest in ETFs. So they have to invest in equity. So where you'll go if you want to get a cleanest exposure to Bitcoin? MSTR is probably the most correlated um, equity company, which if you're an equity fund, you can buy and get exposure to Bitcoin movement. Right? So that's other one. What else? And the other thing which MicroStrategy has done, which is the convertible node offering, right? And that's a maybe next week I'll spend some time on it. I'm still trying to understand, um, what's a money glitch that he has discovered. And I would correct myself that I thought he was just like becoming degen and just trying to throw up, talk about some wall and Bitcoin power reactor, but actually there is a substance in it. So I spent some time with my friend who's a CFO and trying to understand convertible debt offering. So for his own company, he had done zero coupon convertible debt offering. So I'm like, why would anyone be, why are these hedge funds buying MicroStrategy's 0% convertible bonds? Right? 25% of this $3 billion offering that MicroStrategy has done has been bought by Allianz. Allianz is a insurer in Europe. Is Allianz suddenly interested in getting exposure to Bitcoin? No. They have a big department of a convertible bond traders. And this is a very juicy offering that Michael Saylor has figured out. And the majority of these convertible bonds are not bought by the folks who actually want to go long on Bitcoin. They are being bought by the convertible bond trading desk, whose sole purpose is to exploit the volatility and make quick money, right? And so maybe next week we have a shortened week. I'm actually writing this down, the whole stuff in terms of the game, MicroStrategy end game, what they're doing. And, you know, it's fascinating. I don't think any other company has done it because the underlying asset, Bitcoin itself, is so volatile that MicroStrategy has been able to do it. And could you have done it with any other equity company? Right? There are probably we can find some other equity companies which are more volatile, right? But I think the SEC regulations prohibit a publicly listed company by buying 100% of another equity company, unless you are is a subsidiary or do some stuff. But you can buy commodity. So now Bitcoin is considered as a commodity. That's why MicroStrategy can go and have 100% of its treasuries in Bitcoin. They can't have 100% of its treasuries, let's say, in an XYZ volatile company. Regulations won't allow it. So I think there is some smart stuff that Sailor has figured out, and that has kept the interest in the market. Now look at the leveraged ETFs. All the money that is flowing into leverage ETFs, they need to buy the, these MSTR stock. So that's keeping up the stock of MSTR still high. That's not to say that there's not a demand for Bitcoin ETF. Bitcoin ETF have also got an almost $34 billion asset under management. So the demand is coming from there too. Even I was of opinion, why would anyone buy MSTR? But yeah, there are reasons why in which folks will still buy. But does that mean MSTR is available? It's like, is it okay to buy? That I can't say. MSTR is trading at more than two times the value of the Bitcoin that it has on its balance sheet. So if you think that this premium will continue to expand, then maybe you should buy it. I mean, GBTC, I have seen premium of like 50%, 60% when GBTC was there. But that will be the only reason I'm not a fan of buying MSTR as a stock. But someone wants to try out and design into this, sure. So I guess that's the reason why MSTR is still in demand. So change that happened on Friday. Nasdaq have you know they do the balancing in terms of which stocks need to come in, which stocks need to go out. So three big winners of 2024 now they have joined Nasdaq. Palantir has joined Nasdaq, and MicroStrategy has joined Nasdaq. Now the funds that passively track Nasdaq 100, and there are billions of dollars, hundreds of maybe tens of billions of dollars of funds that is invested in either directly tracking of Nasdaq 100 or reference with Nasdaq 100. Now, I see another pool of capital coming into MicroStrategy, Palantir, and Axon. So all these three stocks have been up nicely for this year. Palantir is up almost 360% year to date. MicroStrategy almost 500% year to date. Let me see. MSTR. Yeah, almost 500% year to date. Gosh, when it was 543, that would have been maybe 700, 800%. Right? And we got Exxon. Exxon is 156%. Not bad. But when you compare with 300% and 500%, you are a laggard. But not bad. I mean, for a company like Exxon, it's now at 644. This is one company which sometimes I think, why did I not continue to hold this company? And yeah, we looked at a company when it was around 200, 220, 250, but that I couldn't justify looking at, uh, you know, what their margins, etc. were. I thought, but happens. Some of the companies run away from you. Some of the companies you are thankful that you didn't buy it because the business didn't really justify the valuation. I don't know. In this case, maybe there are folks who still think the Axon is a great one, are able to see something which I am not able to, and that's fine. So these three companies have now been added to Nasdaq 100. So if we are a shareholder of these companies, you might get a little bump just because, if nothing else, just because there is a more capital chasing the stock and will push up the price. Right? So that's happened on Friday. Now let's look at the business of these companies. Right? This is Palantir, and I have spoken multiple times around my thesis about Palantir, and I still hold it. That thesis. It's a good business, not as great as I think the share price currently is. Right now, Palantir is what, 75, 76, 76, right? Yes, I think it's a good business in my own perspective. You could have a different perspective, not as good as 76 share price, right? It's been growing. What it grew at 17% last year. Next year growth is projected to be 25%. Fine, 25%. A lot of software companies grow 25%. It's a good growth, not a gangbusters, right? So I don't want to pay like PEG ratio of 6 or forward P of 170 for a company that is growing at 25%, maybe 30%, and still diluting the shareholders with the margins that are close to mid-teens. It's not a 60% net margin business. It is 10%, 12%, 15%. So I can't wrap my head around why the stock is doing what it is doing. But like I said, eh, animal spirits are back. And this is at a same level of enthusiasm in the social media as like Tesla. So maybe they know better. Right? This is MSTR. If you look at MSTR business, now this is one example wherein there is no need to look at the business of MSTR because MicroStrategy is a data analytics company, but the zero valuation of MicroStrategy we can attribute to anything related to data analysis. Their core business hasn't doing much. Look at the revenue growth over last 15 years. It hasn't been growing at all. Right. So if you want to now go back and do a fundamental analysis around on MicroStrategy, just on the business of it and not on the treasury functions, will not touch this stock from 100 feet pole. There is nothing in the stock, right? They've been diluting the shareholders, which is what he has told time and again. He's going to do that. But this company has become completely different company since 2020. And I think the reason why is because he's probably figured out we can't compete against Microsoft and other data analytics company. Our revenue has almost stagnated to $500 million since 2014. I think I have last 10 years of data. Yeah, 500 to that's all right. Between 400 and $500 million. There is no revenue growth. So what to do with that? So if he figured out, whatever cash I have had, maybe I'll just buy Bitcoin and transform myself into a different company. Now it's become a Bitcoin treasury company. So if and all the valuation is now derived from, or what do you think about the Bitcoin and how is MicroStrategy going to capitalize on that one? So this thing is a material for MicroStrategy. Let's look at Exxon, the third entrant into Nasdaq 100. Uh, you know, decent gross margin business, right? They've been issuing shares, so there is some share dilution, not as bad as what I've seen in, let's say, Palantir, but I would love it to not dilute at all. Low operating margins, and this is what has kept me away from not, continuing with Exxon. Is all the valuation is based on what are they gonna do in future, which is their cloud, their pivot from being a taser company to a cloud SaaS-based cloud company, evidence.com. I just want to see some evidence, unintended evidence of evidence.com adding to the margins, right? So once it starts to have, maybe I would okay with to buy at a higher price, not just yet. So growing nicely, 30%, not bad. 30% revenue growth of or like 3 year, 5 year, or 15-year CAGR 20%. It's a good revenue growth company. So from a company perspective, I think it's fine. It's good. It has got a good moat, and I think that's why maybe the market is paying up for the moat that they have. I have not seen that yet translating into the margins. I'm just waiting for to give me a proof of, but maybe it's gonna be, who knows? Someone is thinking maybe it's gonna be next Amazon. So it is not being trading at a reasonable valuation. It is expensive. Forward P 111. Even if you forget about a PE side, even if you look at EV by EBITDA, I mean, from all the valuation ratio perspective, it is expensive. So it's right now it's all about mostly about the story of what they can do with the evidence.com. Number two, it's the mode that they have in all the law enforcement and the police departments across the US, and maybe their international expansion. I think that's what is driving the stock price to crazy number. Right? So, but this is, I mean, better than MicroStrategy when it comes to the core business. All right, but these three companies have now been added into Nasdaq 100. So now even if you say, hey, I don't like crypto, it's not for me, I hate it, I'm anti-crypto army, that is gonna come into your retirement account anyway.
Vivek,
Yeah.
the people, the company, I can't remember what company even, that they switched my crypto from SoFi. They said I don't sell it because there's a lot of corruption, people stealing crypto.
I didn't get it. Which don't sell?
Okay, SoFi, I bought two crypto, right? And they sold one of it, but the other one got transferred to some other well-known company. But the vendor told me when I was asking if I could buy more crypto, said don't put any money in your account and don't sell your crypto because it's gonna get stolen.
I don't know. I don't know what they're saying. I
So what
mean,
I'm saying is there's corruption out there still.
oh yeah, yeah. So you have to be on a regulated exchange. I don't know what SoFi has done or what that particular crypto is about. There are a lot of scam crypto in the markets, just like we had a scam app in 2021. So I don't know about the specific issues, but now it's, crypto has gotten legitimacy. After this election, I think politicians have figured out one thing. There is zero upside to be anti-crypto. Zero upside to be anti-crypto. Because I don't think enough Americans actually care about the fact, if crypto goes high, they are not anti-crypto. Yeah, whatever. Hey, Bitcoin is 100,000. Yeah, whatever. I don't care. So if politicians who have been against crypto, if they thought that they're gonna get, they will be able to please a section of Americans and be elected, I mean, they learned their lesson in 2024 election. Whereas if you're pro crypto, there is a section of American society that does care about the crypto business. So either I think now politicians probably have learned a lesson. Either you pro or you be neutral. There is no upside. If there is a section which hates crypto, then you have some upside to become anti-crypto because you're going to get vote from that section. Looks like that section doesn't exist. There is still a section in American society, in our society, we still hate big banks or might still hate our healthcare system. And if you go against big banks, go against big pharma companies, you might still get votes. But I don't think there are folks who are who hold anti-crypto stance very tightly, that if you that they will vote for you for anti-crypto. Now, I think that's a new, nobody cares when it comes from an anti side. But when it comes to pro side, many rich people who care about this pro. If you are a pro crypto, and that's why we've seen a lot of pro crypto politicians and now been getting a big elected. Uh, Aditya say, can you please explain what you mean when you say we all end up with a crypto and pension account anyways? So now if MicroStrategy is being part of a QQQ, tell me, all your pension accounts will have exposure to QQQ and SPY. So you get whether you like or not, you'll get a taste of MicroStrategy. That's what I meant. Is MicroStrategy part of SPY? Uh, QQQ got inducted. I didn't. Okay, not SPY yet, but we got a QQQ in it.
That's an incredible point. I just connected the dots. Thank you.
So people say, hey, come on, guys, it's gonna come into your retirement account anyway. Not directly, it will come in indirectly. Right. All right. Right. D sector performance. Nothing to complain. The worst performing sector has been healthcare, and I think it might still be challenged based on the recent incident. And I think there may be a lot more scrutiny going around on the healthcare and how to fix it. I don't know if we will be able to fix it or not, but it might still remain, on radar of politicians and the regulators on what to do with this sector. Right, this whole incident of murder of a healthcare exec CEO, I think has caused other people, the powers to take some notice. And I think there is a statement from United Healthcare also. We got to figure this thing out. I don't have a solution. I don't know if anyone has a solution, but it will be in the discussion, on the discussion table, right? So there could be uncertainty on this one. So generally, if you think, hey, this sector didn't perform in 2024, maybe I want to get an exposure to the sector because, hey, capital will rotate. Be careful. Be careful. Doesn't happen always. Happened with energy in 2021, 2020, yeah, too, because energy sector was completely down during COVID. And when we opened up the world, energy sector was the best performing in 2022. So I don't think the same story will apply, and I could be wrong, but that's my thesis on. But yeah, what a time to be an investor, man. What a time to be an investor. Great to see all greens in year to date, 1 year, 5 year, 10 year. Yeah, 1 month, 3 months, anything could happen, right? But extend your time horizon, life is good. Fear and greed index stubbornly still sitting under neutral, even though to me it feels like a lot of animal spirits is coming back in the market, but I think it is because of the breadth of the stock market. Uh, so probably I'm not won't pay too much attention to this one and go all in just yet. CI seems to be at support. Which is CI stocks? Is it CI or CL? P-Shank, is it CI or is it a stock? First of all, let me just. Oh, Cigna. Oh my God. What did they do? Oh, they had earnings, and wow, they wiped all the gains for the year, and now they are down like 10% for the year. So I'm not a investor in any of these healthcare companies. I just don't. I mean, number one, it is regulated, so you don't know how the regulation could change their business competitiveness. And so I'm not an investor in any of these companies. But now with Cigna sitting here, what's the dividend? Does it look attractive from a dividend per share? They pay 5% dividend per share. So let me just look at any dividend yield, etc. It might attract some dividend folks. Not that as well. 2% of dividend yield. But they're doing 5% of buyback. $78 billion. So from market perspective, have kind of a peaked out since like it's back to where it was in 2018. Yeah, I don't want to get into at least these pharma companies until we get some clarity on that. Now is it at a support from a technical perspective? Does it look to be okay to go long? Sure. For a short term, yeah. So if you really want to take a long exposure, maybe selling a put won't be a bad idea at this point of a time. Right? When I'm looking at this, it's below 20 RSI, and the CCI is below -200, and it's lower than I generally look at this if I want to sell a put or a call, saying, hey, maybe this is a better than any other time to sell a put. Looks to be the case, right? So I won't, but from a long-term perspective, I don't know. I don't understand this industry much, but for now, the sell-off seems to be technically is telling us sell-off has extended. So it may see a reversion. Hey, no guarantees. The charts only tell you what has happened, and then we're trying to guess what might happen. But future is always uncertain. But this may be a better time to sell a put, or maybe to get an exposure than, let's say, 2 weeks ago. That I will agree. That I will 100% agree. Oh, yeah, Broadcom is now $1 trillion. Yeah, Broadcom had what? 25% jump. I don't own Broadcom, but post earnings 25% jump, and it's like, geez, now it's a $1 trillion company. It's up 107% year to date. And why not? Because now all Google and the Amazons of the world and Microsofts of the world, they are saying, hey, you know what? We will use our own chips. Google will say, why do I want to give all the dollars? I mean, they will still give some dollars to NVIDIA, but why do I want to give all the dollars to NVIDIA? I will use my TensorFlow chips for some of the workloads that they are best at. For a general purpose AI workload for my customers, I'll still have NVIDIA because they probably do a lot of stuff better. But if I know for that I need to run only this specific type of model, and TensorFlow chips, right? And those Google chips do it better, maybe I'll use that. Same is the case with Amazon, right? They have Trainium and Infinium chips, their own in-house chips. And who configures all those for Google and Amazon? It's Broadcom. Broadcom will basically create their ASICs using the chip designs from Google and Amazon. And if we see more and more companies trying to diversify away from NVIDIA because damn, those chips are super expensive, and maybe they don't need the most performant chips always for all type of workloads. There will be some kind of workloads for which you need the best chips. For some other kind of jobs, you might be okay with little less performing chips. Then why you want to pay for NVIDIA? If I have to go for 4 blocks, I don't need Lambo. Any car will do. I don't I don't have, but if I have to go for 200 miles, maybe getting into Ferrari makes sense because I can, assuming there are no speed limits on a highway, but I need to go for a smaller distance. I don't need Ferrari. It's an overkill. So possible. And Broadcom is best known for creating those custom ASICs and build it out for them. So maybe that's the reason. I don't own Broadcom, so I've not looked at them as a company, but welcome to the $1 trillion club. Right. So all right, what else? Sridhar said they're planning to make two AI chips for other companies. Oh, that's simple. Yeah, so I mean, if you want to get a custom chips, Broadcom is the name in this field. Marvel was up to $11 trading at 121. Did Marvel had a result? Okay, think got some gone into hibernation. But anyway, so a lot of hardware companies are back in the name. Nvidia not going to be the only game. Okay, so all right, another hardware news, which is a topic for one of the topic for today is Google had announced Willow. Basically, it's a Willow chip, which is basically for quantum computing. Right, the quantum chip Willow, it completes a benchmark computation in under 5 minutes that would have taken today's fastest supercomputers, not the computer that I am using to run this Zoom meeting, but the supercomputers, it would have taken 10 septillion years. And I think 10 septillion years, it's a huge number. I don't even know what the septillion means, but it is more than the age of universe. Okay? That's a huge breakthrough in the science of quantum computing. Right? And of course, this will create a similar level of urgency in big tech companies as well as nations around harnessing the power of quantum computers. We all know quantum computers, the work on quantum computing has been going around for almost 20, 30, 40 years, but we haven't been able to get a decent amount of results until now. So Google announced it on, I guess, on Monday, and there is a lot of a chatter I'm seeing around. Hey, what could happen in the world? Let's say if NSA or any adversary nation get hold of this tech, what havoc can be wreaked on the world is a question. Yeah. So since I follow some crypto folks, a lot of questions are around, hey, is it going to break Bitcoin encryption, using this quantum computing? How far away are we from quantum computing breaking the encryption of Bitcoin, and then it's game over, right? And on the news that when Google had put out this press release, I think Bitcoin fell down 5 or 6%. It was down to 95K from 101 or something. So uh, I think Google. So it's a company that Google has been funding for almost 10, 12 years, which is focused on working this quantum computing, and they basically publish the results. What I got to know is that the details around the progress by Google had been published in Nature, but now the cleaned up the PR release came out, and that's where the rest of the world suddenly figure, oh my God, what the heck Google is doing. No, my concern is I don't worry about the Bitcoin. I'm like, if If this is the case, then everything that I've done in the life, online, digitally, online transactions, my Amazon, your bank accounts, everything that you've ever done and encrypted is at risk. Forget about Bitcoin. Right? I have much bigger problems right now if this is going to be true. So, little bit around how the quantum computing actually works is, and again, this is a very nebulous concept. So bear with me. Our traditional computing, classical computers, as it is called, worked on with the bits, which can be ones or zeros, right? So that's why at an very low level programming language, everything gets converted to ones and zeros, right? That's how the bits can have only either one or zero. Now, quantum computing work on qubits, which could be one or zero at the same time. So it's like, let me give an, if you're flipping a coin, if a coin lands, it could be either head or a tail. I'm assuming it's not a rigged coin, right? That has got two heads on it. It can be either head or a tail when it's stabilized, right? But when you flipped it, while it's flipping in the air, what is it? It is head or a tail. It is actually both. We really don't know what exactly is it. At a fraction of a time, if for microseconds, when it comes to the qubits, same as the concept on qubit, it could be zero or it could be one. Right? Now that enables now you can, so when the bits are only one and zero, there is only one possible state for each bit. But now there are two possible states for a qubit, so the amount of a calculation that you can do suddenly becomes your power to the power of 2, right? And hence there is a lot of different type of computation now you can do using quantum bits, which were not even possible with your classical computers. Okay? So again, another theory they say is like, hey, if you are from a computational power perspective, if you're trying to solve a puzzle, right, those jigsaw puzzles, classical computer will pick up a piece and put it in, make sure which place it is, run through all the calculations and say, yes, this is the place where it could be. Pick up another one, do it. When it comes to quantum computing, it's looking at all the pieces all together. And hence, the things that take us septillion years can be done in 5 minutes when it comes to the quantum computing. Now, that's all around of power of quantum computing. Now, the work has been going on in quantum computing for almost 30 years, 40 years. But to find at exact moment of a time whether the qubits is 1 or 0, it's almost very, very, very difficult. Right? So there have been a lot of errors. That's, when you try to observe the behavior, and these are like subatomic particle to observe something, it's a Heisenberg principle, I guess, that the moment you see an electron, it moves because it got energy through your light energy and it's no longer there, right? Something, so it's very error prone. The watching the behavior of qubits itself is very error prone. So what some of the advancement that have happened over past, let's say, decade or two is, I know this one qubit is error prone, but how about let's add 10 together and observe the behavior together, right? Maybe the error from one another, they could cancel out each other. So what Google has done, and I think Google, even IBM have a quantum computer. I don't know what they call it. Google had announced another chip sometime earlier called Sycamore. Now their chip is Willow, which is much better. So what Google has done is basically create 105 qubits, and logically, so those are like all individual qubits, but then they wrote an there's an algorithm that sits on top of these individual qubits, which consider all of them as single packet. So what Google found out, that as you add more qubits into this creation of a logical qubit, the error actually start to reduce. So that was a finding which is, oh my God, now we can actually figure out if we can reduce the error, then we can start to use these quantum computing for our day-to-day applications, right? I'm sure we are probably decades away or few decades away before it becomes, that it's being used everywhere, but at least they have a path now. They spend decades in trying to figure out how to correct that error. Now, using a combination of individual physical qubits combined into one logical qubits using an error correction algorithm, what they found that the error rates is now at an acceptable level. And that's what now they released. Their finding is saying, I think there are 105 qubits. And that's able to do whatever this benchmark computation in 5 minutes, which will take a supercomputer almost universe, more than the universe's life. Now the question is, what happened to our whole encryption? So I also, I want to talk to some friend who actually work in companies like Symantec, etc., to understand more on how this whole cryptography works. But whatever basic understanding I have is, most of our cryptography, your online banking, etc., they use RSA encryption, which will need around 4,000 qubits to break, right? And then there are, let's say, your e-commerce, and let's say Bitcoin itself, for hashing they use a SHA-256, which will probably need maybe tens of thousands or maybe million qubits to work together for it to break. So it's not going to happen today, tomorrow, or next year, but it will probably take some time, because all these hashing functions are based on how quickly can you factorize a big number. And in 1994, Professor Shor actually came up with an algorithm which, if given enough computing power, can break down any large number into the factors. Now, at 1994, the only challenge was to use that algorithm was we don't have enough computing power to actually use Shor's algorithm. But now we have enough computing power. So now I think the folks will kind of get back to Shor's algorithm, try to break it and see. But again, studies say that we are still a few years away. And by that time, there are advances happening in cryptography field itself. I'll just throw in a word. I've yet to understand that. Something called a lattice cryptography, which basically is a quantum resistant. So I guess there will be a race between, hey, let's add more and more qubits, make sure we can stabilize, make sure we can get all this computing power. And on the other side, there will be a race to, let's change all our software to use a quantum resistant cryptography algorithm. So I guess maybe 2, 3, 5 years down the line, we will have all the IT consultants. Right now everyone is doing cloud migration. In 1998, 1999, all the consulting companies were doing Y2K migration. So if quantum computing, if we continue to make progress in this one, that day, we will have those years when all the companies will be focused on migrating their software from currently SHA-256, which is one of the best encryption that's being used by NSA, used by CIA, used by Amazon. That's the best one. So migrate from SHA-256 to I think they're already working on some SHA-QR, like quantum resistant cryptographic uh, algorithm, or whatever you may want to call it. So so the other concern is and the Bitcoin community also is aware of this. I mean, those are some of the smartest cryptographers that we have on the world anyway. And there have been discussions around moving Bitcoin core to start using quantum resistant cryptography, um, later. But again, Bitcoin moves very slowly because for the reasons it has become now almost $3 trillion asset, and we don't want to have any chances of it breaking down, right? You can't make it as like a money. You can store all your wealth in something that suddenly breaks. So I think by design, the Bitcoin ecosystem has ossified. They say, you know what, we don't want to change. You want to do any innovation, do in the liquid network or on L2s or the networks like Stark network, do there. Don't touch my core. It's fossilized. Now the question is, once this quantum under the threat of quantum computing being able to break SHA-256, and the signature, they use electrical curve signature, which I think even more complex than SHA-256. But talk about 10 years down the line. Like three years ago, we did not know what the heck AI can do. Now everyone is like writing a few sentences and generating a videos, right? So sometimes the technology itself improves at an exponential rate. So today, if we're saying, hey, 105 bits, who cares? I need 1,000,000 bits for you to break Bitcoin. That million number may not be too far away. So I think that's the one concern. Community had, and the like Bitcoin was down 5%, but I think I don't see any risk to Bitcoin right now or for next 2-3 years. I think it'll take time. Now, when I say risk to Bitcoin, what do I exactly mean? What could happen? Right? Is it that the blockchain gonna break? What exactly that risk means? So let's dive into that and try to understand what the heck is happening here. Now, Bitcoin and probably like a lot of other technologies are based on public-private key asymmetric keys combination, which is like, how should I, like if I'm a private key is like a key in which I can sign something that proves that I'm a holder of that. Public key is available to everyone. Public key is like my account number that I can give it to you, right? And then you can basically transfer money. Private key is like my online banking password or credentials that only I have and no one else have. So when it comes to the Bitcoin, is the same one. So if you want to receive a Bitcoin, you'll share a public key saying, hey, send the Bitcoins to this address. Right? Now, okay, let me take a step back. You share a public address saying send the Bitcoins to this address, right? And so that address is known publicly. Now, when Bitcoin started, 2009, etc., that time the way to generate these addresses was that when you have your public, so you create a public key, and then using a public key, you generate you create a private key, then using a private key, you generate a public key, right? And then the tech at that point of a time was that public key itself will be your address. So it used to be called P2PK, pay to public key. So it means now everyone knows your public key because they're your address. If you have had a Bitcoin wallet at 2009, because that's your address on which you are sending. An address is public. right? If you have received Bitcoin from anyone, you have to share, hey, send me to this address. Now that address itself is your public key. Now today is for years, for decades, this public key, private key combination has worked out because there is no way as of today for any technology to derive your private key out of the public key. It's a one-way hash, means you can use your private key to create a public key, but you can't go the other way around. It's a one-way road. So if let's say if I'm on a Bitcoin, I create my own private key, I generate a public key out of it using whatever shard, these wallets will do it for you. Now I can share my public key happily because there is no way for anyone to figure out, do the reverse engineering. It's a one-way hash. Okay. Now, question is, now with this quantum computing coming in, if they're able to break that one-way hashing, if someone can, looking at the public key, someone can generate your private key, then anyone can do the transaction and sign with the private key, right? Then it's like, hey, someone got access to my online banking password. Now the question is, those Bitcoin addresses which were generated in 2009, all the way, I think, till 2011 or 12, in which the address itself was the public key, those may be at risk. Whenever quantum computing becomes strong enough to break the hashing algorithm and able to get to the private key using the public one, which is available, which you can go and see Satoshi Nakamoto's public key, because his Bitcoin address is available on blockchain. You can go and see what his Bitcoin address is. You know what his public key is. His, her, they, whoever, the Satoshi Nakamoto, right? Today, no one has been able to get access to those whatever million Bitcoins because no one has been able to generate a private key out of that public key. So those addresses will be at risk. 2011, 12-ish time frame, Bitcoin developers became smart. They say, no, we're not going to expose your public key as an address. They started to hash that itself. So, let's say if you got into crypto industry after 2012, any of the addresses that you have created, those alphanumeric digits, those are not your public keys. Those are the hash of your public key. And when you do a transaction, during that time, because if you need to transfer the funds, you need to know what the, and during the transfer of funds, need to check whether it's been signed properly or not. Then you need the public key to check it. So it gets revealed when you actually do any transaction. If you're not done any transaction, then you're still safe. If you've done any transaction on Bitcoin wallet using that address you had, then your public key has been revealed. That's why it is the best practice to never reuse the address. So wallets will generally always create a new address for every transaction, right? So is everything under, a right on issue? I don't think so. Even if they are able to break this hashing algorithm, I think some of the initial coins or the addresses could be at risk unless the community figures out how to, what to do with those. But if you have not reused your addresses, then you never revealed your public key to the world, and then there is no risk. So this is where the situation is. I'm not worried about it. There are quantum resistance algorithm. The technology is already available. We will move towards that. But the question that we'll still have in mind is, that's more of a philosophical question, is what is community going to do if this becomes reality, that the quantum computing can break this hashing algorithm and get to the private key, and everyone knows what's the public key of Satoshi Nakamoto's wallet is, and there is I don't know, whatever the Bitcoin value at that point of it could be $100 billion, $500 billion of those coins sitting there. It's a huge, huge incentive for any nation state, any, for them to use it to get access to that. Now, there are ways in which community can do it, but then it goes against the ethos of, hey, we're not gonna censor anything, etc. So we'll see what happens. But I'm not worried about this quantum computing just yet. Number one, the quantum computing tech is not at the stage where it could be, usable. It still have years to go before it can become even powerful to break the algorithm. And even if it does, it's not that the whole Bitcoin ecosystem is under threat. Yes, there are some addresses that were created and addresses have been reused will be under threat. But I guess people will become wiser and they'll move it to a new address, which they've never used before. But those who have forgotten, like Nakamoto's, right? Maybe there is, who knows, whoever was Nakamoto was, maybe those people are dead, right? So those dead addresses that have been created before the Bitcoin core moved towards hashing of the public key, those will be at risk, which will be maybe 5-10%. I don't know. So that's an overall on and there's on this the threat of quantum computing to overall blockchain / Bitcoin. Bitcoin came in news because, hey, if this breaks, it's game over. I mean, not exactly game over, but anyway, selling million Bitcoins will be a big selling pressure. Right? So, so there are some of those old wallets whose owners probably have either forgotten their keys, so they can't move towards a quantum resistant new addresses. Whenever Bitcoin implemented, you can't move it to a quantum resistance addresses, so they will still be sitting in old fragile, I would say, lock boxes, right? Which maybe quantum computing will be able to break, unless community comes and say, you know what, let's blacklist those and we're not going to accept. But that goes against the ethos of openness. So we'll see. So for now, I'm not worried about anything around this. I'll be more worried about the rest of my life. Gosh, you guys are gonna get access to all my pictures, embarrassing pictures, photos that I don't want you to have access to because those are stored in my iPhone. That will be more embarrassing than, oh my God, it broke the Ethereum encryption or anything. I think we will have a much bigger worries than it breaking the Bitcoin encryption. Are there any questions? Okay, see, Mike is saying, could quantum computing create a scare that Bitcoin will be correct? I think I just addressed that. Are there provisions to upgrade older BTC blockchains with newer keys? I thought a blockchain is immutable. Yeah, so and that's what you can't. What you could do is, like, when you implement a new quantum resistant logic to create a new wallet addresses, you will have to move your coins from a previous address to the new address. But that means you should know you should have access to your private keys of the old address. No, and that's what I was saying. There are 25%, I think community thinks there are 25% of the Bitcoins have been lost, means their private keys have been lost, or maybe the owners have died without telling anyone or sharing their private keys, or could be like Satoshi Nakamoto. We don't even know because none of those are ever moved in 15 years. So if you can't move it to a quantum resistance address, then those are still vulnerable, right? Unless we do something that goes against the ethos. So that's the case. That's we are. All right, any other question?
Hey,
yeah.
I bought my first enterprise, a Zscaler.
Oh, you got your
very, very little
stock Zscaler?
Yeah.
Good. I don't know what your thesis is, but hopefully you looked into it from but if your position size is okay, it's fine. You can hold it. I don't have Zscaler, not looked into it. I don't know what's the margins, etc. And I've done with, I mean, I have had a lot of times when it has grown crazy. I'll give it to them. They have a good revenue growth. But yeah, me personally would want to maybe stay a little away, because I mean, it's a growth story. It's not a margin story yet. But the share, I mean, with the whole liquidity coming in and interest rates going down, market might give better multiple to companies that are growing, and this is growing. It is growing. I'll give it, that's for sure. But not still not margins perspective, the story is not that great. So I probably may not want to, me personally don't want to hold it for a long term. But you do what works best for you.
Sorry, I have no idea why I bought it, but I know it's not something that Kramer boasts, so I figure it doesn't have a lot of investment.
All right. I don't subscribe to this way of investing. Uh, Inverse Kramer, something that Kramer has never said. Or, if your position size is small, you can gamble whatever you want to. Okay. All righty. So what happened in the crypto on the crypto side? MicroStrategy, the playbook of MicroStrategy is now being used by others. We saw Riot Platform doing exactly the same thing, basically doing a zero convertible bonds, raising money from, I guess, hedge funds, and then they want to buy Bitcoin using that money. I saw another one, I think Clean Spark. They want to do a zero convertible bond, but they want to buy back their own shares. I'm like, what the heck? So I don't think this is going to end up nicely, but as long as the music continues, they are playing it. So next week, I will probably do a little deeper dive into this whole convertible bond and what the heck is happening. If there is no other topic, if I find something else more interesting, maybe I'll jump into that one. But I learned a few things on how these things actually work out. Right? So it's not that the, their initial reaction when you look at, hey, why are the corporates buying like 0% bonds? Gosh, they must be very bullish on Bitcoin. Nah, that's not at all case. So don't think that's the case. Okay. There are ways in which they are still able to generate decent amount of profits for themselves without having any thesis on Bitcoin. They actually don't want to have any thesis on the stock. So the companies that have bought MicroStrategy's convertible bonds, means those bonds will convert to a stock, actually have a zero exposure to how the stock moves. MicroStrategy stock, it doesn't matter to them if the stock goes up $20 or a stock falls down $20. They're all hedged. They just don't want that risk. So us as a retail investor, it is foolish for us to think those guys are buying bonds which will get converted to the stock. Those guys, those hedge funds must be bullish on MicroStrategy. There is absolutely no freaking way. They're all just neutral. They're playing a different game. I'll talk about it in next week. So just don't go and buy because their bonds got oversubscribed. It's an interesting game. Unfortunately, you and I can't play it. It's only accessible to whatever Section 144 investors, and those hedge funds are all into it. MicroStrategy trade has become one of a very, I would say, crowded trade in the convertible bond industry. And none of them are actually taking a bullish thesis on MicroStrategy, but they're ready to make money. All right, other thing, BlackRock says that 2% allocation to Bitcoin is okay. This is the biggest money manager in the world, manages around 11 to 12 trillion dollars of assets, US dollars of assets. They came up with the report. I just have one chart. I don't have the whole report, which tells basically they ran their simulations and try to find out what's the allocation to Bitcoin and what's the portfolio risk that Bitcoin adds, but what's the amount of a risk that Bitcoin adds to your portfolio. So they ran their allocations with Bitcoin 1% allocation to Bitcoin. This is like the traditional 60-40 portfolio, 60% equity, 40% bonds. And now I think they took out maybe portion of equity and put 1% in Bitcoin, put 2% in Bitcoin, and you run all your simulations looking at past data and maybe run your Monte Carlo simulations and then see the portfolio risk and see how much is attributed to the amount of Bitcoin you added. So if you add 2% allocation to Bitcoin, 5% of the risk in your portfolio comes from Bitcoin. Right? 95% is for the rest of whatever you hold in your portfolio. Now, which is equal to the level of a risk which is coming from average Max 7 stock. So now we know that a lot of funds are all, nose up, are deep into Max 7 because that's the trade for last 2 years. And the risk that the Max 7 adds to your portfolio is the same level of a risk, which even if you take Bitcoin allocation to 2%, it's 5%, 4%, almost same. So that's the story that BlackRock is now basically pitching into to their investor is, guys, we're not adding too much risk to your portfolio by putting allocation between 1-2%. It's the same amount of a risk that it adds to your portfolio like the other ones that you've been holding it for years. Your Max 7s. So if you think that it is too risky, then you should also get rid of some Max 7, right? Again, they're playing their book. BlackRock is now becoming big in this. They would definitely want the other money managers to start buying the ETFs, their ETF, right? So, take it up with that pinch of salt, that saying this is the biggest player who is now in Bitcoin. So we'll obviously probably talk in positive light of Bitcoin, but I mean, it's good to see. And if they are able to convince people and money managers to move 1-2% of retirement assets or asset under management into Bitcoin, that's like hundreds of billions of dollars. Right? So Bitcoin is already, I don't know where it is now. We didn't look at crypto prices. I know in the morning it was 101. Actually, since morning I already drove almost 100 miles. I had to drop my kid to place which is 50 miles from my place. So we went there in the morning. I came back. Yeah, it's like 101K. But I think the story is yet to play out. That doesn't mean it is going to be a straight line. It's never been a straight line in this asset, right? It's always been, it will test your patience a lot. So an analogy that I while I was driving back came in my mind was, you say if you're a long-term investor, it's like, hey, you buy a good stock and then you hold it, hold it, hold it. It's like watching a paint dry, right? Investing is like watching a paint dry. You just sit and watch the business. Bitcoin is like watching an exterior wall painted, watching it dry. So you paint it, looks great, and then there are rains because today I drove all that throughout the rains. It's been raining heavily in Bay Area. So I drove 100 miles on rains. I'm like, you paint the wall, it rains, and that's what it rained in 2022. It rains every cycle, it will rain, and then you wait and watch, and then you call the painters again. They'll do something, and again, it's painted again. The Bitcoin will go to the next coat of paint, so next level up higher, and then it will rain again. We'll have our winter, and then you wait, call the painters again for the next cycle, and this cycle repeats. It's like watching a paint dry, but in between the cycles of paint being washed off and repainting, that happens Every time we had this repainting here, but we got another layer of paint. Again, the washed off, repainting here. Again, rains came, washed off, repainting here. Again, that got washed off. Now repainting. So there will be washout happen. There will be rains, right? But it's never gonna be it's an exterior wall. You just can't, I painted, okay, I'm going, bye. It's great stuff. My house looks great. No, it won't. So that's what happens in this asset class. So you need to be really, really patient and be able to go through this, drawdown 70%, 80%. I don't know if 80% will happen now or not, because we got institution money in it, and a lot of these hedge funds are killing the volatility in Bitcoin. But 50%, yeah, I think 50% drawdown could happen. And if you're not comfortable with the 50% drawdown, you might want to think about something else. Okay. Sridhar likes the knowledge. You're welcome. I was driving in rain and there it hit me, because I was actually listening also to this, what the MicroStrategy has done. I was listening to a YouTube video of a seasoned, a convertible hedge fund trader who spent like 30 years in convertible bonds. And he was trying to explain the game behind this. And I was driving and I was like, gosh, this space is so volatile. And that's where the analogy hit me. Okay, do you know why the Charlie Munger was so against compared to trading crap? Charlie Munger was also against gold, because at the end of the day, it doesn't produce anything. Right? What's the story behind Bitcoin right now? It may be able to be produced later if it becomes on more use cases. Right now, the only thesis of this is government is debasing my currency. Government is ripping us because of inflation. They are reducing our purchasing power. So I want to hold something which government cannot produce it at their own will. You can hold gold. Government cannot create a gold in lab. Not diamond. Don't hold diamond. Diamonds are now created in labs. So we can't use diamond as a store of value. Right? But we can hold gold, because government is not able to create the gold in the labs yet. And there are enough people that hold gold so for anything to be a store of value, it can't be, number one, you shouldn't be able to create it with these. Number two, it can't be so rare that very few people have it. There are, in a periodic table, there are elements that are rarer than gold. So the question would be, guys, if only rare things that you can't create and exist in very finite quantities, why not, I don't know which those elements are, maybe rhodium, or pick up anything. There are more elements on periodic table which are rarer than gold. But if it becomes so rare that only one or two people or very few sections of the society can have it, it can never become the store of value which is agreeable by majority of the people, right? So that's why there is a stock to flow model which is being used. It has to have enough flow or enough stock available that everyone can get access to, and then the flow needs to be controlled so that you can't create it out of thin air. So now Bitcoin has now started to reach at that level where it could become a store of value, because now 100 million people, 50 million people, 100 million people, and if you want, you can get access to it. But government can't create it out of thin air. That's the only use case right now. It doesn't produce anything. It doesn't have any products. It doesn't produce any goods, any services. And both Warren Buffett and Bitcoin and Charlie Munger don't want to invest in the things whose value is derived only from the fact that someone else will give me more money for it, right? They don't invest in gold either. So that's why They never like Bitcoin. Number two is because Bitcoin, the history was it's being used by criminals and all that all the tainted history. So it's like doesn't produce anything by its on its own. It's just sitting like a pet rock. The pet rock could be valuable based on things that have happened external to the pet rock, right? And they never liked it. They never liked gold for the same reason, because it doesn't generate anything. But that doesn't mean gold, we don't consider gold as valuable. So that was a why they don't like the Bitcoin. Bobby says the crypto industry is a hedge against the government, but now the government joined the crypto movement. Doesn't make sense if the crypto is really hedged against the government or not. So government has participated, but the government cannot create Bitcoin. And again, I don't want to paint every crypto with the same brush. The discussion, I mean, Aditya has a question only on Bitcoin. So I'm addressing only the Bitcoin. Even government wants, they cannot create more Bitcoin. If they want to hold it, welcome. But you can't create more. We've been creating $1 trillion every 3-4 months. But whatever you may try, you cannot create more Bitcoin. You can actually create more. If gold become, GLD right now is whatever, 250. I think gold is what, 3,000. I don't know where the gold is trading. $3,000 ounce or 25, 28. Let's look at /GL. What's a gold? Okay, let me go to GLD. So GLD is what, 244. Right. So let's say this becomes 5,000, 500 or 1,000. There will be gold mining companies that will invest in extracting of more gold. There is more gold available that the companies know, mining companies know, but it is not profitable to extract it just yet. But if the gold prices go high, you will see that the supply of gold will start to increase in the market, because then it becomes profitable to mine it. Fortunately, Bitcoin, you cannot create more. Let's say if it becomes 1 million, everyone wants to add more computing power to create a Bitcoin. Maybe for the for a brief period of a time, you may be able to do it, but then the difficulty will adjust automatically. The beauty of this logic behind the mining process is that as more and more technology is added to mine Bitcoin, it adjusts its difficulty, means it makes it more and more difficult for you to actually take it out. So that's why on a predictable cycle of a 10 minutes is when the Bitcoin gets mined. Doesn't matter if you add more, maybe there will be a one block where if you were able to mine it in 6 minutes, then the difficulty will get adjusted. You're coming back to your on an average schedule of less than 9 to 10 minutes. It's like saying if you add 20 drillers and backhoes and get all the mining equipments to take out the gold, and the gold shift is down by 500 meters because it realized, oh, there are a lot of extra mining capability coming to extract me. Gold goes down deeper in the earth crust. That's exactly how the Bitcoin works. So, and I don't talk about any other, I don't know about any other, I don't want to, but this is exactly the Bitcoin stuff. But other crypto, there's a lot of a grift. 95, maybe I'll be okay to say even 99% of are just grifts. All right. Okay, so I guess we'll just do the predictions, and before that, let me give you a quick update on the portfolio. I bought a little bit of a QQQ, covering the short position that I've been maintaining for quite some time. Even though overall I'm long, but I still had some QQQ short because I own a lot of tech stocks. I bought IBIT when that whole scare around the Willow chip came around, and I thought, I don't think it's anything gonna happen in next 4-5 years. So I bought something on IBIT. What did I sell? Disney. I had a covered call. I closed it and sold the shares. I'm not sure how the transition, etc., how it would work out, and I couldn't convince myself to increase my position on Disney. Then I was like, okay, leave it. I'm just gonna sell it. And then the Palantir covered. I had a covered call at 67. I don't want to defend it. I think it's already extended. So let it get called away. And again, these are not our recommendations, but I want to be transparent. So, on terms of what I bought and what I sold on the stock side. All right, last topic, crypto predictions. Before that, any questions? And I will sip some water. No, all good. Everyone ready to? I assume anonymity is another use case for BTC. It's a pseudonymous. So you're anonymous as long as you're completely off the grid. But today, I don't think the world is, we can survive in completely off the grid world. What are you going to do with the BTC? You have to, eventually you want to convert it into a dollar because you want to spend and buy something, you need dollars. The moment you touch the fiat rail, game over. Game over for those who are engaged in nefarious activities, thinking that, hey, you know what, I can buy Bitcoin and I'll be okay. No one will know me. There are cases where FBI and IRS, they all have now crypto units, right? They have just waited and watched the blockchain activity for the criminals to do one step to catch them. One step where they have moved the funds or they've used the Bitcoin address that's being either involved in scam or tainted or money laundering, or one of the sanctioned addresses, and they use that address to buy something in the real fiat world that connected you to them. And even, let's say you bought something and that company accepts BTC as a payment, right? We bought it through by sending the BTC through that wallet, and that company has your address where they need to ship the goods, is over. Right? Now, IRS, FBI, they all got your address. So it's a pseudonymous as long as you don't have to come out of, you're completely off the grid. Then it's anonymous. Otherwise, it is pseudonymous. And once we know who you are, now all your history is right up like an open book. It's blockchain is open. It's even worse than, I think, worse than the banking system, because in banking, at least only FBI knows. If I know what your address is, and if you have reused that address, or then even a common person can figure out what you've done, where have you moved all the funds, etc. Because the blockchain is open. So, all right, last one, crypto predictions for 2025. So Bitwise actually came up with their predictions. These are not mine. Okay, like it or hate it, blame it on Bitwise people. Bitwise, for those who don't know, is an issuer of one of the Bitcoin ETF. They have been in this space for, I guess, 12, 13 years, trying to educate normies, or call it, trying to educate traditional finance people around this whole crypto industry, and help them to learn. I mean, we are way early in this. It's still an education phase. So I don't think we have yet scratched the surface of what are the possibilities around it, right? I would say it's like an iceberg, right? So there's a lot of stuff that is still need to happen in this industry than what has already happened, right? So Bitwise is one. They do a lot of seminars. They meet registered investment advisors. They meet fund managers, tell them about the space. First of all, they need to cleanse up all the bad or misinformation that have been floated around this whole Bitcoin and the overall generally crypto stuff. I mean, with the new tech, there is always good and the bad stuff, right? When internet was first open for public, most of the things floated, and I guess right now also the majority of the traffic goes on the pawn sites, right? But that doesn't mean internet is bad. Right? Imagine if government would have shut down the internet saying, oh, only those who want to engage in pornography or pedophile, they want to use it. What would have happened? Right? So don't just kill it because bad people use it. If tech is good enough, bad people will also want to use it. Anyway, all right. So their predictions start with Bitcoin, Ethereum, and Solana will hit new all-time highs, with Bitcoin hitting above 200,000. Okay. Now, these are the big numbers. uh, why they're talking about Bitcoin on 200,000? Because, you know, we had only 1 year of ETF. And if you go back and look at the history of ETFs like commodity ETF like GLD, the inflows into the ETF in the second year is generally higher than what's in the first year. Third year it's even more. Fourth year it's even more because a lot more people become educated. Now, gold was not an investing for everyone, right? Because there was no way to invest in gold other than buy a gold bar. Then you have a storage problem and all that. When you created a GLD as an ETF, people were skeptical. Investors were skeptical. How can I believe someone who'll say GLA? How do I know it's like there is a goal behind it? How would I know it's going to track the value of the gold, right? You have that education process. So whatever the flows are in the first year actually comes from those who know the space, who have been in the space, who have put in time and effort. Then next year you educate more people. So they are expecting that there will be more flow coming into the Bitcoin ETF. And you can't create Bitcoin more out of a thin air, right? So doesn't matter what the flow is, the supply of Bitcoin is consistent. The only way those ETFs will be able to buy more Bitcoin is if they are able to pay higher to someone to take it from someone else. That's why they think the price will increase. Number two, a lot of tailwinds happening on the government side. If the US government follow to have 1 million Bitcoins in a strategic reserve, then this 200,000 could be 500,000 or maybe a million, who knows, right? I'm not betting on this one. We don't even have the bill hasn't been tabled. I mean, it's a long process to go. After Donald Trump get elected, then we'll see what happens. Secondly, is on Ethereum side, they're giving a target of 7,000. I feel that's too aggressive, but really Ethereum hasn't done much this year. A lot of a limelight has been taken over by Solana for this year because of a lot of action on the meme coins. But what they feel is that Ethereum will return back. The narrative will shift as the activity onto the layer L2 chains like Base and Starknet and Optimism, Arbitrum, that will increase. The other big tailwind behind Ethereum will be the stable coin. So we already have a stable coin at the bill, which had earlier we tried to pass it. Previous administration we couldn't pass it, but now if it goes through, there will be rules and regulations around stable coin, and that to me that seems to be the what you call as a killer app for crypto. Bitcoin is just a store of value right now. If anything else, yeah, fine, DeFi fine, NFT is great, you can create whatever, but we haven't seen much use case of them yet. I think the first app, real useful app, will be the usage around stablecoin. We are already seeing a lot of payment companies investing into this. PayPal is there, Strike is there, and all that. Third is the Solana because of a lot of momentum going on the meme coins, and Solana has presented itself to be a formidable, a competitor to Ethereum for some use cases where you need very high speed, right now, and you are okay to give up some of decentralization. So so those are the tailwinds why behind their predictions, right? Bitcoin ETF will attract more flows in 2025 than they did in 2024. I just talked about, even though this year it has attracted almost 30, this was 33.6. I think now it may be almost $34 billion, like, which is like unthinkable from any ETF expert. I think the highest estimate was that it'll gather $15 billion. It has done more than twice of that. Okay. And in the took analogy, the GLD, and looking at how much of the inflows came in GLD in year 1, year 2, year 3, it probably we expect more in year 2 and year 3, right? Number 2 is major wirehouses are still coming online. As of now, I think there's only one that has told that if their clients want, you can give them exposure to Bitcoin. I don't think there's any wirehouse who have completely gone and told their advisors, financial advisors. When I say wirehouses, I mean these big firms like Morgan Stanley, Bank of America, Franklin Templeton, those who have army of financial advisors, like Merrill Lynch. You have thousands of financial advisors who manage money for rich people. None of them have actually told their financial advisors yet, saying, hey, go and pitch 1% allocation to your customer. I think Morgan Stanley has told if your customer is asking for it, go it, but you can't solicit it. Generally, warehouses take a year, 18 months, 2 years to get through the whole process of your compliance and risk. Everyone is scared of getting sued. So they need a lot of time to do their due diligence before they tell you to thousands of army of financial advisors. Maybe in 2025, maybe 1 or 2 warehouses will actually do it. And then your financial advisor might call up and say, sir, ma'am, I got a wonderful proposal for you. We can add maybe 1% allocation to your Bitcoin and you without adding much of a risk. And you're like, okay, if you say so. Right? So that means a lot of inflow could still come in. And the third one is maybe 3% is the new 1%. We saw BlackRock talking about it, saying we should have, up to 2% of allocation is okay. Fidelity in Canada has already considered 2% allocation in their conservative portfolio. So now we have ETFs in US. There is no reason that Fidelity will not say as a part of their model portfolio, maybe to have a percent allocation or 2% allocation. Right? So I think the industry is warming up to having some percent allocation to Bitcoin. Third prediction, Coinbase will surpass Charles Schwab as the most valuable brokerage in the world, and the stock will top 700 per share. Again, all is driven by the facts that we talked about, right? Stable coins. Coinbase has got their own L2, which is Base. So if you use Base for doing anything on Ethereum, the revenue get accrued to Coinbase. And third thing is staking and custody services. Huge business. Right? All these ETF issuers who are buying Bitcoin, they're not holding Bitcoin on their wallets or their wallet. No, it's like $35 billion worth. They give it to experts to custody their Bitcoin, and out of 11, 9 of them are actually custodying their Bitcoins with Coinbase, right? And the other one, I don't think it is here, which is like, hey, if we get the same crypto summer when the degen activities start to happen on crypto assets, people love to trade. And that will be good for Coinbase because they generate fee out of every trade that you do, every buy and sell that you do on crypto, they're going to generate fees out of it. So more excitement come in, and generally the excitement comes in whether it's a stock market or whether it's a crypto. When the prices go high, people get very optimistic. It should be reverse. People want to get in when the prices go high. So we expect more trading to happen if the optimism and enthusiasm in the crypto industry continues. That will bode well for any crypto exchange, Coinbase being one of them. Right. 2025 will be year of crypto IPO. Prediction number 4, they're looking at 4 companies: Circle, Figure, Kraken, Anchorage, and Chain Analysis, saying that these companies may go IPO. IPO market has been frozen. I mean, now it has started to open up. We saw IPO of Service Titan, we saw IPO of Pony AI, we have seen few IPOs this year, but largely I mean, still nothing as compared to what we have seen in previous year because of a lot of administration concerns and frankly, the interest rates are so high that people, money managers don't want to allocate it to IPO. Why take a risk? I can get 4.5% on T-bills. So with interest rate going down and now administration becoming friendly to crypto, they Bitwise think that there are 5 companies that can actually IPO in 2025, right? Number 6, tokens launched by AI agents will spearhead a meme coin mania even bigger than 2024. All right, agentic. If you have heard Snowflake's quarterly earnings, I think, or any other AI, any other tech company, they're all talking about agent workforce or agentic implementation or AI agents. Discussions have moved from AI models to AI agents. Those are autonomous agents who will do work on your behalf. Example, a Gemini will have an agent. You say, you know what? I want to go to Europe and with my family want to look for an individual house rather than a hotel, and these are our dietary preferences. These are the places I want to go and see, and I want to see the top 5 attractions in every place. That's it. I'm done with my instructions. There will be an AI agents, one responsible for figuring out what giving my dietary restrictions, what are the restaurants that actually can cater to my dietary preferences. Other will be able to figure out where are the rooms available, right? And the third agent might book me for booking agent, right? All these are autonomous AI agents will do the work for me. That's a end goal of our AI agents, right? And it comes to the business side. If you hear Mark Benioff, he's talking about agent workforce, right? Which will supplement, I won't say replace, which will supplement your human workforce. So when you could have a similar AI agents on the crypto side today, if you have to create coins, it's become much easier. You can go to Solana and or maybe other platforms to create your own coins, but you can have agents do that for you, right? It's just like you give in your parameters and agents will create whatever meme coin. Now, are there any use? I mean, do they have any real world use? People like to gamble, right? And they want every new shiny object to gamble. And it won't be far away that an incident happened in the world, and maybe within 5 minutes, we have a coin created out of it. There's an agent that is looking at a Twitter feed and seeing what is trending. And there's another agent which is looking at the trends and then really creating a meme coins out of it. So Bitwise think that the meme coin mania may even be higher than what we have seen in 2024. So there is a company called Clanker, or maybe it's a platform which actually is already doing it. And look at how many coins it has created. It's like creating out of thin air. It costs nothing, right? So don't go and that's why I have a zero sympathy with the folks who will just go and buy these coins. These have no value except the fun value. Number of holdings countries, number of countries holding Bitcoin will double. So right now there are 9 countries that have Bitcoin on their reserves. US is the biggest one, 198. China is the second biggest, 190,000 Bitcoins. Then we got UK, 61,000. Ukraine, 46,000, so on and so forth. Bhutan. Suddenly I'm seeing 60 Minutes doing an episode on Bhutan because now everyone figuring out who the heck is this country. Nobody heard about this country. It's a small, tiny kingdom nestled between China on one end and India on the other side in Himalayas. Only reason why 60 Minutes, and I think that's the only reason why folks in US, okay, I shouldn't pay every, I mean, those probably who have know about that South Asia geography will know it. Otherwise, there's no need to know about this country. When I saw 60 Minutes doing an episode on Bhutan, because now they figured out, gosh, that country has got 11,800 Bitcoins. What Bitcoin can do for you. So, so what they're predicting, maybe more countries will adopt to it. And I don't know if that'll happen or not. If US gives a direction, then maybe other countries may follow. Number two is these countries we know of. What if there's a country that's never spoken about it? We never know who generated that wallet. We don't know what the IP address of that miner is because they've obfuscated it. They use Tor. Right? We don't even know. Maybe there are more. I won't be surprised if some Middle East country, especially those sovereign funds, have invested something in Bitcoin because they're trying to diversify their economy outside of oil anyway. And they have a big risk-taking capabilities, right? They invested like $4 billion in WeWork. So I think some of those sovereign wealth funds will be okay to take a position in Bitcoin, just that we don't know of yet. These are the 9 that we know of. Okay. Coinbase will enter S&P 500. MicroStrategy will enter Nasdaq 100. Okay, so this is already done. We don't have to wait for 2025. MicroStrategy is now part of Nasdaq 100. Coinbase, we will see. And I think the only the bigger part is once you become a part of these big indices, there is a fund flow that will automatically come into you. You put money in a retirement fund, they're going to buy S&P 500 or they're going to buy QQQ, and that QQQ issuer will buy MicroStrategy or Coinbase or whichever these are part of these indices, right? And then every 2 weeks, you will see fund flows going into this. US Department of Labor will relax its guidance against crypto and 401k plans, ending the billions of dollars, enabling billions of dollars to flow into crypto assets directly. That means, so I think Fidelity wanted to do it in 2022, which is basically allow retirement, basically to buy crypto in retirement funds. And Department of Labor, so if you do this, you're gonna look at all your other businesses, right? To Fidelity. Fidelity has been in this game for many years. A lot of people don't know. They think they're very conservative. Fidelity is not a public company, so they can take the risk which others haven't. Abigail Johnson, the chairperson of Fidelity, she has been in the forefront. I think Fidelity has been in this space since 2011. They have their own custody services. So, so Department of Labor says, we'll take an investigative program to protect the plan participants from those risks and all that, Now, with the new administration, if Department of Labor become more friendly to crypto, that'll be another reason why we might see some of these retirement, big retirement planners could allow you to buy, let's say, iBit directly, or in case of Fidelity, maybe FBTC directly, right? Not through proxy exposure of buying SPY or Nasdaq, which has like 0.5% exposure to MicroStrategy. Maybe you may be allowed to buy an ETF, which is just focused on crypto. Stablecoin assets will double to $400 billion as US passes long-awaited stablecoin legislation. I talked about it. We tried to get it passed last year. Didn't happen. Maybe next year it will happen. This is, from my perspective, this is the, I would say, one of the killer application, right? Which will bring in the crypto into mainstream media. When you will transfer funds to, let's say, and you say, gosh, I don't have to pay like $16 for a wire transfer, and it got transferred like within a few minutes. Wow, I like it. Or if you're remitting money to, let's say, your family outside of US and you don't have to pay through your nose 10%, 15% to Western Union, that's when the general public will realize, oh, it does have a value. This tech does have a value. And that's what I said, that might be a killer application which can put this technology on radar of other people. The value of tokenized real world asset will become $50 billion. I'm not too sure of it. Who cares? So tokenizing real world asset mean your house has become a token, so it can. So whenever you tokenize anything, suddenly increases in value because now more people can get exposure to it, right? We tokenized gold by creating a GLD ETF. Now a lot of money has then flown into GLD. Suddenly we see the prices of gold is going up. And this is the like Wall Street standard stuff, right? You can securitize it. So in Wall Street term, we call it securitize it. You have mortgages. Mortgages were nothing. Who worried about mortgages in 1960, 70? Until Wall Street figured out a way to securitize it, and then you can distribute it to, the hedge funds. Now the mortgage-based securities, those funds have become billions or trillions of dollars of industry. It actually brought down the whole financial system. So once you securitize it in crypto terms, once you tokenize it, there's a lot of stuff that you can do, right? So they're talking about that. Maybe I think that's too aggressive because you just can't create a token or thing. You need to have a law which backs it up. You can create an NFT of your house and say, if I buy that NFT, I get 0.01%, 0.001% of your house. Can I go and lay a claim? No, the rest of the legal system has to work along with it, right? So, but anyway, where I can see the tokenization work is still in the trad 5 perspective on the Wall Street. Let's say if I'm doing a bond offering, convertible bond offering, I might create token out of that. It becomes much easier from a settlement perspective, becomes much easier to remedy interest payments, right? That I can do. That I have seen. That's already happened in 2023, 2024. BlackRock has done it. Franklin Templeton has done it. Real world other assets like house, car, I don't think so that's going to happen. And I guess there's a bonus one, so I'll ignore it. Which is like, hey, why would talk about only 2025? Let's talk about 2029. 5 years later, their prediction is Bitcoin will hit $1 million, which has the same as one, Kathy Wood, which says 2030 it will hit $1 million. That's the end of the predictions, right? 12:30. Sorry, took longer. I thought we'll be done in 10 minutes on this one, but took a little longer. But I appreciate you guys, staying over and while I was rambling through these predictions. So thank you. All right, I can hang around for another 5 minutes. Any question? Oh, there are some questions. To buy BTC options, IBIT options is the only way? No, there are other options available on others also. But I like IBIT because those are the most liquid ones and the bid-ask spread is tight. That's why, if you recall, I had FBTC, but then I sold all the FBTC and bought IBIT because FBTC also have options, but they are okay. No, it's not even refreshing. But number one, the liquidity and the width of the bid-ask spread is wide. So I looked at all of them. Not all 11 have options enabled yet, but all of those who have enabled, IBIT is the best if you want to deal in options on Bitcoin ETF. All right, Sachin. Prashant, does these lists indicate the reserve held by government or by people of the country? Oh no, that is a hold by government. You don't even know which people are holding what, right? If I have never if I created a private key and basically I created my wallet and bought a Bitcoin, let's say if I'm mining it, right? Then no one knows where I am. So these are the ones which are on the government. So the government get access to it either by mining it or by confiscating it. The US has got all access to it because they broke Silk Road and they got access to the wallet. Colonial Pipeline, they froze the wallet because it was being stored into a US entity, and then you got access to that. So that's how US and it was on an exchange, so they hold the private key. So that's why US has it. I think UK has a similar stuff. Most of them are, I think El Salvador, they bought their own. Maybe Venezuela bought it. Ukraine, we donated to them during the Ukraine when the Russia invaded Ukraine. There was a big drive to donate crypto to Ukraine. Maybe I guess they got it from there. Bhutan, I know they mined it. I don't know how Finland ended up. But these are the ones which are government are holding. You can buy IBIT in IRAs, right? Yes. Because now IBIT is like an ETF. So it's not IRA is not like a 401k. So in 401k, they have limited choices. They don't want you to experiment with your 401k. When it comes to IRA, it's like, hey, I'm my own on my own. So yes, you can buy IBIT on IRAs. Aditya says stock analysis request, coin market cap 77. Okay, got it. All right, I noted it. We'll do it next week. And Rameshji had a couple of questions. Can we review covered call spread strategy? How do you manage if you're about to lose shares to assignment? So I actually have Tesla. So others can drop off. Maybe this is the last question I'll address. And so I have a Tesla in which I have it is expiring on 20th December, and my strike price. So first of all, I deploy various flavors of covered call strategies, right? One is a covered call spread, means I'm not gonna sell a naked call against the position that I hold. I'll do a spread. And I learned my lesson in 2021. Reason is 2021, let's say I had pick any stock, everything was going to the moon. Right. So let's say I had Zoom. Right. I don't know if I had, but take example, I had Zoom and I put a covered call at 100. The damn stock went to what, 400. And I'm now looking at like a foolish guy, like, gosh, I missed the whole upside, right? Which is fine. When I did the trade, I knew it, but then it bites you when you have a seller remorse. Then I thought, oh, I need to do better. Then I decided, for any of the momentum stocks that trade on what's happening in the market, stocks that trade on news, stock that has a high beta, stocks that are more volatile. You don't know, it could go 10%, 15% up in a month. I decided to not sell a naked, just a call against if I have 100 shares, I'm not going to sell a call. I'm going to sell a wide call spread. So now in case of Tesla, my call spread was 320 to 340, I guess, or maybe 340 to 360. Either of these two. Doesn't really matter. They're deep in the money. Right? Now, the reason why I did that was Tesla is a volatile stock. Right? Suddenly people get enamored with Tesla and Tesla army will just pump it up. And I don't want to lose all my 100 shares at 320 or 340. It goes to 400. I don't know where Tesla is right now. It's actually 436. Right. So it's like up 60-70% from here. This was 243. And I think when I did the trade, the Tesla was around maybe 240 or maybe 220 or something. So at that point of a time, 340 looks to be a reasonable buffer. But when it comes to companies like Tesla, MicroStrategy, Coin, Robinhood, Palantirs of the world, this 10-20% buffer means nothing. So instead, I went with a call spread saying, okay, I've got $100 upside. And if it continues to go higher, maybe I'll not make any additional money between 320 to 340. But if it continues to go higher after 340, the craziness stays, I'm back in the game. So that's my strategy. I'm not going to do this on, let's say, and the reason I'm able to do this, because these are very volatile, you get good premium. But then I sacrifice a little bit of a premium to keep myself in the game, especially on these crazy high beta momentum stocks. So that's my strategy. Or the other way I could have done is, which I've done in Palantir, is if I have more than 100 shares, let's say if I have 300 shares, then I will sell only one covered call. It's almost the thought process is still the same. Saying if stocks continues to go higher, I want to stay in the game. So, in Tesla, I don't own 500 shares. right? So otherwise, I would have done just one naked call because, okay, 100 shares taken away, I'm still in the game with the 400 shares. Right? So in companies like where I don't own 100 shares, or maybe I own only 100 shares, I will do a spread if it is a very volatile company. And historically, we have seen these crazy movements in this. So that is my strategy around first of all, when I do the trade. Now, how do I manage it? Now I have two options. This trade is 100% in the money. Like where is 344.36 expiring next week? So this is what I was planning to do, and you will see it when I'll talk next time, is I'm going to sell a little bit of a Tesla shares and then close the calls, because when I close the call spread, I have to take a loss on the option trade. But that is okay, because I will sell some of the shares to basically compensate for that loss, and I hold my rest. I think I already have done one for January expiration with a strike price maybe 460, 480. By gosh, it will continue to go higher. That's fine. So this is how I will do it. I'll basically sell some shares and hold the rest and close the call spread for a loss. But overall,
you can let it expire in the money and they will just go away, right?
yeah, I mean, then I will just lose on the option side, right? But I've also learned a lesson in 2021 that many of these stocks, which I did not sell, when my call got, and either I took a loss on the call, and, oh gosh, I don't want to sell it, it'll continue to go high, they came crashing down. So I'm trying to, I don't want to sell all, but hey, this has become it has extended too much. Let me sell a little bit of it. I mean, I sold Stitch Fix at 60. I was cursing myself because it went to 90. Today Stitch Fix at $2, I guess. Same case with these guys like Snap. What I did not sell was, like, let's say Neo was at 50. I did not sell it. You learn. But Neo has been one of the best performer when it comes to the options, right? So it's a huge option volume. So I have no issues around Neo, but sometimes when these moves are inexplicable, and then I'm thinking, gosh, I don't know when it will correct. Right? And then I don't want to now holding the bag at that price, didn't sell anything when it went so high. So I'm trying to look at the both sides so that if it falls down, say, okay, I sold something. If it continues to go high, okay, I'm still holding something. I mean, there is no 100% right move. You have to figure out how you justify yourself. So that's my strategy. Cool. Alrighty. Okay. All right. Thank you, everyone. Next week, we will only have 1 hour session, and then no session on 28th. That will break, and I'll be back on 4th. Cool. Alrighty. Let's hope we all have a great Santa rally. We'll see. We have 2 weeks to go, and maybe another 2 to 3% to get to 30% SPY for this year. What a great year it has been. Thank you, guys. Thanks a lot. You're welcome. Bye-bye.